Welcome to the 3-Minute Trading Coach. I'm Brett Steenbarger, and today we're going to be talking about an interesting topic: why we need emotion for our discretionary trading. Now, on the YouTube page for this video, I have linked my most recent Forbes article, which goes into depth about emotion trading, what tilt is all about, but why our feel for markets is also important. When we trade, particularly on a short-term basis, much of our idea generation boils down to pattern recognition. We've observed markets and experienced markets so many times that we become familiar with how they move. And in the process of market movement, we develop a feel for when a market might be changing, when it might be breaking out, when it might be moving higher or lower. And that intuitive feel, that intuition, is an important part of how we generate ideas to trade. Now, what happens to traders that becomes problematic is that we become so focused on trades we want to make, we become so focused on P&L, so focused on money we want to or need to make, that our self-talk interferes with our intuitive gut feel. And so at that point, we become relatively stupid in terms of our pattern recognition. The successful traders I've worked with have really done two things. First, they look at more things in markets. They look at unique edges in markets or potential edges in markets. They don't just look at the same charts and draw the same lines as everyone. They look at unique indicators that reveal something about the marketplace that's not readily apparent from a market chart. Most recently, on the Trader Feed blog, I produced a series of 3 posts on the NYSE tick and how an understanding of the psychology of the marketplace can provide us with an edge. We want to look for unique measures, and then we want to follow those and follow those and follow those again and again and again. We want to review how they set up during the day, day after day after day, because we want to build our pattern recognition. So we want to follow unique, promising information, but we have to follow it enough, in enough variations, that eventually we internalize the patterns. Once we internalize those patterns, we start to develop that intuitive feel, and suddenly it becomes apparent. The upticks are ticking up and ticking up and ticking up, and price can't move higher. We've seen that pattern before, and we know how that ends. By creating a psychology where we are open-minded, clear-headed, and open to intuition and the gut feel, we can make emotion work for our trading. This has been the 3-Minute Trading Coach. Thanks again for your interest. Look forward to seeing you next time.